to Singapore now to see what Mikio Kumada is expecting this week to bring. He's global strategist at LGT Capital Management. He joins us now. So, Mikio, good to have you on the program. I suppose it's going to be all about Jackson Hole and sort of a wait and see until that point on Friday. Is that right?
Yes, Jackson Hole is going to be a big focus since, as your reporters and you reported previously, quick decisions out of the European Union or out of Europe are not very likely. So all hopes are going to be on Mr. Bernanke and what he might say about QE3. Unfortunately, while this may give an indication that he will do QE3, might support markets, but it won't change the bigger picture in the short term.
Why do you say that it won't change the bigger picture? Is that because QE2 didn't really work, and so why would QE3 work? What would it do to equities and to treasuries?
Well, QE, regardless of what whether QE2 worked or not, depends on what you focus on. It certainly helped financial assets quite a bit. The problem is that the more you do, the first problem is that the more you do of the same thing, the less efficient or the effective is likely to be. And the other thing is, and I think that's the bigger one, is that the actual problem right now is probably more on the European side. We would rather need a QEE, a European QE, rather than a QE3 from the U.S. Looking at European politics, that's not very likely in the short term either.
So the concern really is about Europe. I mean, what do you think investors are pricing in terms of a recession in the U.S. and in Europe? Are they pricing that in now?
Well, I think, you could look at it both ways. You could see the very low yields as an indication that the market expects the Federal Reserve to keep buying them even on these levels. I'm talking about treasuries. But you could also make a case that what the market is pricing in is a recession, if not an even more negative scenario, such as a economic depression of sorts, like the Japan scenario that we've seen in the past. So right now, I think the jury is out there.
Does this mean the volatility continues? Does this kind of these extreme swings that we're seeing, does that have legs here? Well,
that is certainly our expectation, at least for the near term. There's been some considerable damage done in financial markets in recent weeks. For whatever that reason, whether it was the U.S. or the European policy decision, doesn't really matter at this stage anymore. And that will certainly take some time to repair before we can have more confidence in financial markets, I think.
Are we bouncing along the bottom, would you say?
Well, that would be a good scenario, yes. We hope this is a bottom. It's possible that we are now building a bottom. That may mean that we've seen the low. It may not mean that. It's just too uncertain at this very moment.
Do you think we could get some emergency action perhaps before Friday? Perhaps markets won't have to wait until Jackson Hole. Could we see some coordination on behalf of the global central banks, the Fed, the Swiss central bank, and the Japanese?
Well, we live in a time where political action, political activity is increasing worldwide. We've seen the Swiss National Bank thinking radical things. We've seen the Japanese, of course. So, yes, that's quite likely. But it depends on how markets behave in the coming days. The worse they are, the more likely a political response is going to be. But that's not going to solve all the problems in one go.
All right, Mikio, we'll also be watching that oil price as well, see if that gives investors anything to be more optimistic about. Thanks very much for being with us.